Jeremy Myers. I lead the distribution team at Pengana. Thank you for joining us for today's update on the Pengana High Conviction Equities Fund. This is a fund that has attracted a lot of attention recently, mainly for the right reasons. It was one of Australia's top performing funds last year. But this year, as many investors will know, it has been a lot more challenging. I'll shortly hand over to James McDonald, the portfolio manager, who will walk us through the impact of some of the recent market events, as well as the current portfolio positioning, and outline the key drivers of the conviction within the fund. If you have any questions, please enter them in the Q&A box that can be accessed from the icon on the screen. James, over to you.
Really like to do a few things today, just to reintroduce Jeremy and myself for those who don't know us, go through the investment process, performance, recent performance and issues there, including Opthea, and then turn to 5 of our major stocks, some of which I haven't spoken about before. So for those of you who don't know, Jeremy and I, we both have about 30 years each of experience, mine mostly in international markets, Jeremy more domestic, but we complement each other well. I've done a lot of healthcare and technology. Jeremy's more on the industrial and consumer, but also looked at some common areas like rare earth mining and data centers. Turning to the process now, as the name says, it's a high conviction fund, can't have more than 20 stocks. It's always had a high weighting in healthcare, materials and IT. It's not prescriptive, but it's just areas we like and are experienced in. Mostly small and mid cap, but doesn't have to be. Can invest in Australia and overseas. Most of the holdings are listed in Australia, but very few have anything to do with the Australian economy. So in that sense, we do see it as a portfolio of global businesses. It's really a small cap growth portfolio, but once again, it can be growth or value, and we have owned value stocks in the past. It's got a negative ethical screen, so nothing that's harmful to the environment or society. And it has a very flexible PDS, can hold up to 100% of the portfolio in cash. We, of course, wouldn't do that. So what are we looking for in stock ideas? Firstly, and most importantly, we want companies with a strong competitive position. That might be a technology, a patented technology, a high market share, a low cost of production, a rich mineral deposit, etc. Secondly, and probably equally importantly, is we want to buy those businesses at large discounts to their fair value. Nice to have features are under-researched, out of favour or hidden value. They don't have to be that way, but you tend to make better returns if they are. We like companies with strong balance sheets, and that's sufficient cash to get through to value realisation. And we like quality management who are aligned with the rest of the shareholders. And generally, it's really nice to see companies where the founders have very large stakes, which happens in many of our investments. Next, just turning to how the portfolio is positioned at the moment. Healthcare, as I mentioned, has always had a high weighting. It's approximately 45% of the fund across 15 holdings. Critical minerals processing and mining is about 40%. And this sector is a real beneficiary of the current trade war. China banned the export of all heavy rare earths to any country at the beginning of this week, which has been a very positive impact across our portfolio in recent days. We have about 10% in cash. We're selectively deploying that and buying some of our beaten down holdings over the last few weeks. But of course, there is still some lingering uncertainty with the tariff situation. So turning now to the 3 critical minerals holdings. Hyperion X is our largest holding in the fund. It's developed a low-cost titanium manufacturing technology in the USA. The US has no titanium mineral deposits and no sponge capacity, which is sort of the precursor for making metal. Russia and China account for about 70% of world production, US government really wants to bring that back to the US. Brazilian rare earths. It's by far the richest deposit globally, twice as rich as Lynas here in Australia. China mines 70% of the rare earth minerals and produces 90% of rare earth magnets. There's obviously a huge scramble by the rest of the world to bring that supply chain or get that supply chain out of China. Really accelerated this week, of course. MTM Critical Minerals recycles gallium, germanium, and also can recycle PCB boards, which are very rich in gold. China produces 100% of the world's gallium, 80% of the germanium, and China banned both of those exports to the US last year. So the prices of those have tripled, I believe, to around $3 million a tonne, which is quite extraordinary in the case of germanium. We've got 15 healthcare holdings, about 15% of that, or 15 holdings across 45%. About a third of that is in what you'd call biotech holdings. None of them have the sort of binary outcomes that Opthea did, which I'll touch on in a minute. A lot of them are largely de-risked. Our largest holding is Clarity Pharmaceutical, which many of you will have heard me talk about. More on that later. A radiodiagnostic and therapy for prostate cancer. EBR Systems, which got FDA approval on Monday for its cardiac resynchronization therapy device. Genetic Signatures, a molecular diagnostic company with a newly approved FDA test for gut pathogens. Two medical AI software companies and other holdings across cancer immunotherapy, Alzheimer's disease, fibrosis, kidney disease, and pancreatic radiotherapy. So we feel really well positioned in this current volatile market between critical minerals and healthcare. Of course, there are many small holdings that are beaten down in the short term by market noise, but we feel like the fundamental value is building in these companies. So the last month was very tough. In March, we were down 20%, 21%. Got the key contributors to that return. The largest being Opthea, which we wrote down to 2 cents. I've got another slide on that in a minute. Failed 2 phase 3 studies. And the next three holdings are a bit perplexing because they're all doing very well and just got hit with the market sell-off. Our largest holding, Hyperion X, down 24%, which detracted 6% from the portfolio. That was despite it winning a great $47 million grant from the Department of Defense to help scale their production in that new plant in Virginia, and a loan of $11 million from the US-owned government-owned Exim Bank. Clarity was down 40%, detracting 3%. Barrenjoey initiated coverage with a lengthy buy report, $8.70 target compared to the current $1.85. And MTM Critical Minerals was down 25%, detracting 1, despite announcing a memorandum of understanding with an Indian company to help it deal with its bauxite waste called red mud, which is actually a huge global problem. Many of the other smaller positions in the fund were down 5 to 20% on little news, and similarly impacted by risk-off sentiment ahead of the US tariff announcements. Just to put this in perspective, this goes back 5 years. This is the VIX index, sort of the fear gauge, if you like, measuring market volatility. It spiked to 53 last week. It's now back to 30. Has been as high as 80, higher than 80 in COVID and the GFC. I got it to, as I said, 53, but pulling back. Unclear whether we're through the worst of this yet, but certainly it seems that a lot of the tariffs are being moderated, but still a lot of uncertainty, of course. Just another slide on performance. We had a great year last year. We're up 110% in the 12 months to 31st of December, down sort of 30% year to date in the first 3 months. And, obviously a weak start to the year, but long-term returns are still decent, and we feel very good about the underlying portfolio going forward. Just to turn to Opthea, which was the main detractor in the month, which obviously got a lot of press coverage. Opthea was a company developing a drug for a eye disease called wet-aged macular degeneration, which is the leading cause of blindness in the elderly. And they were hoping to add about 5 letters on a vision chart, like an extra line that people could see, which was, potentially the difference between driving and not driving for an old person. The company went into suspension in the middle of March, awaiting the readout of its first study. That was unsuccessful. They had a second study, which they unblinded, also unsuccessful. The shares are still suspended while they work out the funding situation with the partners who funded the 2 phase 3 studies. The company has $100 million of cash. We're not sure what claim those partners have, if any, on that cash, and hopefully we'll find out that in the next couple of weeks. We've written the position down to 0.2%, so the hit's been taken in the portfolio, let's see where that goes in the next couple of weeks. So the reason we invested, as I mentioned before, it was a really important indication. They had a very successful phase 2B study with 366 patients. The phase 3 study had been skewed towards patients who responded better in the phase 2, adding to, we hoped, the confidence that would be a good result in the phase 3. The company had attracted leading industry figures to the board and management globally, and giving us confidence that the drug would be successful. It was a very large market size of $7 billion, so huge upside if the drug had been successful. And there was also subgroups that had performed well in the phase 2 study. We thought even if the headline wasn't successful, some of these subgroups would have performed well. As it turned out, none of that happened. The Opthea drug in combination with 2 existing drugs was no better than the existing drugs alone. And there was no subgroup that was successful. Very strangely, though, the 2 existing drugs performed 50% better than they had in any previous clinical study, which is completely unexplained. So, as I mentioned, we're trying to add an extra 5 letters of vision gain. The 2 existing drugs had previously shown 8 to 10 letters of gain. This time, the 2 existing drugs did about 14 letters of gain. So that is quite inexplicable. Looking at the performance over the last year, healthcare and materials, as I mentioned, are our 2 biggest sectors and our 2 largest contributors. Clarity Pharmaceuticals was a great performer. We actually sold out of most of that. 85% of our holding as it rallied, and we've rebought that in recent months. Greatland Gold was a great success. Hyperion X, EBR Systems on the negative side, Brazilian Rare Earths, Oncosil Medical, a pancreatic cancer radiotherapy company, Alta Global, a gym software company, and Opthea. So now turning to 5 of our largest holdings, which I'll try to go through quite quickly to take some questions at the end. But Hyperion X has been in the portfolio for about 2 years. We think it's incredibly well positioned in the current environment. China and Russia produce about 70% of the world's titanium. The US has virtually none. There's an urgent desire by the US government to reshore the manufacture of titanium. The company has a disruptive, low-cost technology that can produce finished titanium products much more cheaply and efficiently than existing technology. It's low carbon and recyclable, unlike the existing technology. There's very large government funding opportunities available, and in February last month, as I mentioned, they received a $47 million grant from the Department of Defense. Titanium is really the wonder metal. It's much stronger than aluminium, it's lighter than steel, and it's more corrosion resistant than stainless steel. New aircraft are moving towards carbon fiber and titanium. If you put aluminium and carbon fiber together, the carbon fiber corrodes the aluminium. So that's why we're seeing, a big move towards new aircraft Fun fact, the SR-71 Blackbird, the world's fastest aeroplane, I think was 90% titanium by weight. So certainly use a lot more of it if we could. Consumer electronics also moving to titanium. The latest iPhones and Samsung, the smartphones, the high-end models are using titanium covers for strength and stability. Probably a bit too technical and not lacking time to go through this one. It just compares the existing process with the current one. Suffice it to say, you lose about 50 to 80% of the titanium metal making an end product with the existing process. We might only lose 20% with the Hyperion process at the bottom, a lot less energy, a lot less toxic. Titanium tetrachloride is a highly toxic gas, etc. And we can use minerals or we can use scrap. Currently, the scrap is lost and it can't be recycled, or not easily. Very, very little is recycled. So the good news is the company's got its manufacturing facility up and running in Virginia. They opened it in about August last year and just ramping up the production. The quarterly results out yesterday said they're hoping to have that done by the middle of this year, so the next couple of months. They haven't updated this production data for a while, where they said they will give us an update in the middle of the year on how much it'll cost and their capacity targets, which will be an important catalyst and milestone for the company. We're also hopeful of getting more contracts over the balance of the year. Turning now to MTM Critical Metals. I haven't discussed this before in any of our presentations. Very interesting company. The market cap's about 100 and probably today 110 million. Been a strong performer in the last few days, as has Hyperion X and Brazilian Rare Earths. This company has a technology which possibly might be best to just jump forward to this next screen, to recycle gallium and germanium and PCB boards. That's in the first column and the second column. Gallium and germanium are very high value, which I mentioned before, something like $700,000 and $3 million a tonne. And the PCB boards is very interesting. It's a huge market. Only about 10% of PCB boards are recycled at the moment. There's a lot of gold, copper, and tin, but the gold accounts for about 80%. And MTM is able to extract that at really good margins, about 50% margins, and very low capital. So probably talking about a 1-year payback on their investment to build these plants. So they still have to finalise the contract with the partner in the green circle, which is Indium Corp, over the next couple of months. And then we'll know more about the economics on the gallium and germanium. But potentially that is an incredibly profitable business. We could be talking really, $50 million. I'm just putting a number out there, but we need to do more work. We need to see the contracts in 2026. So the factory will be ramped up. The new plant will start production in around December. So 26, we should be up, revenue and profits. The gold business also, they've secured supplies of waste material and should have a fairly fast track to being able to process that as well. The nice thing about gold is that it's obviously a huge market. There's a lot of different suppliers of PCB materials, and I think that potentially has the potential to be a larger business in time, but probably not quite the same rapid ramp up. Longer term, they can also help refining of rare earths and the red mud I mentioned before, as well as lithium, but they're more dependent on partners in those businesses. Brazilian Rare Earths is by far the richest rare earth deposit in the world. Twice the grade I mentioned before of Linus and Mountain Pass. I've got another slide on that in a minute. It's also rich in heavy rare earths, the metals that China banned this week. They're called dysprosium and terbium. You need heavy rare earths and light rare earths if you want to make very efficient and strong magnets. And you need very strong magnets if you want to make EVs, wind turbines, and robots light and give them better battery range. So you can make magnets without rare earths, but they're not nearly as powerful. Um, Rare earth prices have been in the doldrums for a couple of years. China has really been depressing prices to control the whole value chain of magnets and EVs. Um, but we've got an interesting dynamic happening as well, in that a lot of the heavy rare earths are actually being produced in Myanmar. Something like 55% of the world's heavy rare earths in Myanmar, 38% in China. The Myanmar exports were going into China, but that border was closed because of the civil war in September last year. The rebels, the Kachin Independence Army, controls the border areas. They have just started to let some material through, but of course the inventory situation must now be much tighter in China after that, and possibly that may be another reason why China's restricted rare earth supply. It's not just to the US, it's to the whole world. Um, Longer term, we're very interested in robots, and AI has greatly changed the trajectory of demand for robotics. I'll touch on that in a minute. EVs and wind turbines. Um, so, as I mentioned, by far the richest rare earth deposit in the world, 14% grade over the holes, but up to 40 or 50% rare earth grade in some of the deposits they've found. It's a huge 1,800 square kilometre tenement. The existing deposit is just one tiny little dot in a corner. Some of the other areas they've identified are much larger. So we'll get a lot more drilling results over the next year and a mine plan in around the Q3 of this year. But you can see 15% compared to 6% for Linus and 6% for Mountain Pass. They're both about $7 billion companies. Brazilian Rare Earths is 400 million. Should also add they've got huge byproducts of uranium, niobium, scandium, gallium, etc., a tantalum that can be sold as byproducts. So just touching on the robots, Elon Musk is planning. They've got this robot called Optimus. There's about 20 other big robot uh, manufacturing companies working on this. Really well funded by people like Amazon, OpenAI, the Chinese. But Tesla is probably the most aggressive and the most public. They're planning 1 million robots by 27. Musk, of course, is always a bit optimistic, but he's saying 30 billion autonomous human robots could one day be operating globally. I thought it'd be interesting there to look at how much rare earths and minerals do you need to make 10 billion robots? And I think this ties into why we're hearing a lot from Trump about this land grab for rare earths in Greenland and the Ukraine, which we don't think actually have many rare earths. But to produce 10 billion robots, you would need 186 times the current global production of rare earths. Impossible. Lithium and graphite, cobalt, you need lesser amounts of those, but rare earths are the real pinching point. You need 3 to 5 kilograms of rare earth magnets in a robot. Probably don't have time to go through this, but some interesting slides on demand. These came out of the recent Brazilian Rare Earths annual report. And of course, we'll have this presentation available. Clarity Pharmaceuticals, we've talked about many times in the past. It's developing a prostate cancer diagnostic in the $2 billion market, which is currently dominated by Telix and Lantheus, both $10 billion companies. Clarity's hoping to enter this market sort of end of 26, early 27. And we think, they could take 20 or 30% market share in time. There's a very interesting interview, which I put in this month's monthly report with Professor Louise Emmett, who goes into how much market that impact Clarity will have. And she's running this study called CoPSMA, comparing a generic version of Telix's product called Gallium-68 and Clarity's product. And what we're looking at is how many cancers can you pick up in a diagnostic scan, and then would that change the treatment paradigm for those patients? So would you cut more out? Would you send them off for external beam radiotherapy? And we're hoping we can show 20 or 30% of patients have a changed treatment plan, which would be really important. Also got a very interesting prostate cancer therapy, which is currently undergoing a dose escalation study, just waiting for the next 24 patients, hopefully with more data out by the end of the year. A lot of M&A in this sector, and we see this company as a possible takeover target. This is in the white is the share price of Clarity. We sold 85% of our holding as it ran up, and we've bought it all back as the share price fell. It's about 8% of the portfolio. Briefly, what it does, you attach a radioisotope to a chemical that attaches to cancer cells. At low doses, it's good for diagnostic. High dose, you crank up the dose, and that turns into a very effective therapeutic. These are some forecasts from Barrenjoey. In the orange is the EBITDA forecast, in the black is the therapeutic EBITDA. These are the EBITDA. So you kind of have to add these two numbers together. But, they're saying that Clarity by 28 would have, 150, 200 million of EBITDA just from the diagnostic product, which alone will grow very substantially. And then the therapeutic, a much bigger opportunity, but coming in later and, could be many billions of dollars in cash flow annually for this company. EBR Systems, a very interesting cardiac resynchronization therapy company, got FDA approval on Monday. Market cap 520 million, $3.6 billion market. Some very big companies in this space. Longer term, we think it'll be taken over by one of these companies. Very interesting little technology. It's the size of the implant is the size of a grain of rice. You put it in your left ventricle. All the controller and battery is outside the heart, so it's leadless. They're the only company that can do these implants in the left ventricle. There's some in the right ventricle, and they can work together. But they've been developing this product for 20 years. It's been a huge, long road to get here. And very, very exciting technology that really saves lives. I think that's half an hour. So with that, I will throw that over back to Adam for Q&A.
Thanks, James. What I am always amazed about James is how he's able to explain his complicated medical concepts in a way that somebody with zero medical understanding or knowledge is able to really process, and they make sense. We have got a number of questions already. If you do have others, please enter them into the Q&A box. The first question is that this has been another volatile month. What is your performance like month to date?
Yeah, look, it has been a tough month, but in recent days we've had a strong recovery, particularly in our critical minerals processing and mining stocks, and another very strong day going on today. So I think we'll be down a couple of percent still, but not a lot at this stage in April.
Okay, great. A few questions on portfolio construction. You spoke about a high conviction portfolio. Can you talk about how positions are typically sized?
Yeah, sure. Look, we have a very large position. Our large holding is Hyperion X. And I think the origin of these large holdings is we've really built into those as our knowledge has increased. So with Hyperion X, we've participated in 3 capital raisings over maybe it's 2.5 years. And spent a lot of time understanding the technology with management, but that's more than 20%. And then we have about 5 or 6 holdings that are in that sort of 5 to 8% range, and then a longer tail of positions that are 1 to 3%. And as we get more confident in those, we take them up. As I mentioned, we've got quite a lot of cash in the fund, and build up the smaller ones, or conversely exit the things that we're not so interested in. And it's always a tough process because 20 stocks isn't many, and we're always trying to balance. So oftentimes we're having to sell something that still looks reasonably interesting to buy something that's much more interesting. So that's always a bit tricky.
Right, thank you. How do you typically identify opportunities, and what is it that specifically attracts you to healthcare and critical minerals?
Yeah, good question. Look, I've been investing in healthcare for about 23, 25 years, particularly radiation therapy to treat cancer. And I think, like all, we obviously have a small team. We certainly can't cover the globe. So it's really mining the things that you know about. And over time, you build your knowledge base and try and stay within your circle of competence, I guess. Healthcare, over that period, I've uh, obviously looked at a lot of other areas, but healthcare is still a huge market, and there's whole subsectors of that market that I haven't invested in and probably unlikely to. But of course, some amazing new technology comes along, you go and learn about it, and that sort of expands your knowledge base. Critical minerals really started with Hyperion X, and I think we just became more aware of what was going on in the sector, the huge risk that China and Russia posed as the sort of globalization of the world started to come apart. And so I think that's been a driving force in our critical minerals investments.
Great, thank you. Moving on to a few stock-specific questions now. RPX, is their technology actually proven, or is there a risk that as it scales up, technology could fail?
No, absolutely proven. They are manufacturing materials. The new plant is up and running. They have put out several releases. They'd actually been running a pilot plant in Salt Lake City, which I went to visit 2 years ago. This new plant is much larger. All the furnaces are being proven. The whole process in the press release they put out, I think, highlights very much that, and they've got some products they've been making. So I see absolutely no risk in the scale up of this technology.
Excellent. Next question. How secure is the circuit board supply for MTN? Are there any concerns there?
Look, it's a really vast market. They've put their foot down. They've secured supplies with two companies so far, about 1,100 tons a year, and there's various grades of gold in that. Some of them are up to 500 grams of gold per ton. So incredibly high prices there. That's probably $50,000 a ton. To lower grade material, that's $10,000 a ton. So I think what they'll need to do is go around and obviously get the highest grade printed circuit board material first. Um, but at this stage, as I mentioned before, I think only 10 or 15% of circuit boards are recycled. Also in the semiconductor market for data centers, you've got a lot of gallium arsenide being used instead of silicon now for these very high speed, high power consuming chips. And the life of those semiconductors is only 4 or 5 years. So there'll be a whole recycling business in the gallium business as well. That's very interesting. But I think the market is just so large and untouched because no one else has a technology that can really make use of the waste. And the existing waste suppliers who are trying to sell it to refiners are getting huge, they're getting a fraction of the value of the embedded metal for selling those PCB boards. So I'm sure MTM will be able to help the suppliers get a bit better of a cut out of selling them to them.
That makes sense. Next question. This astute observer can see that we're in a tough investment environment at the moment. But with the FDA approving the EBR device, a $3.6 billion addressable market and no direct competitors, they would have expected a massive pop in the share price following the approval. Why do you think we didn't see that?
Yeah, look, it was a very disappointing and perplexing day when they got FDA approval and promptly fell 15%. So I think probably, like they say so often in life, it's better to travel than to arrive. And some people were positioned just for that catalyst. They don't get reimbursement until the 1st of October, so there won't be much in the way of sales for the next 6 months, and I guess much in the way of news flow. But they have already trained about 15 centres who are involved in the clinical studies. I think they mentioned this week they trained another 3 doctors this week. It's a very rapid process. So I think people are going to be pleasantly surprised as we go into 26. But the other probably negative factor is they have $100 million of cash, which will last them until Q2 next year, but they will need more capital to get through to break even. I sort of see this, being a $330 million US dollar company with a $3.6 billion market and an existing FDA approval. I don't believe they'll have too much trouble getting financing. But the long game here is that hopefully after 3 or 4 years, when they've got revenue up to $50 or $100 million, that's when we see M&A from one of those big companies. There's a company called Shockwave Medical that was taken over for $16 billion US dollars. People pay, really huge amounts for these medical device companies once they've sort of established a commercial pathway.
That all makes sense. A more general question, has the Opthea experience changed anything regarding the way you would approach early stage healthcare investing going forward?
Look, it really, I don't think we haven't changed our process. It was very disappointing. As I mentioned, it was by far the most binary holding in our portfolio. The other 15, there's about 5 or 6 holdings representing 15% of the fund that are in that biotech category where you're doing clinical studies. You need to pass those to keep advancing, but there is nothing on the horizon that is binary like that. And of course, if we have very binary decisions like that, perhaps we wouldn't have quite as high a weighting. But we're still going to invest in biotech. We've done very well out of the sector before. As I mentioned, there's 45% in healthcare, but 30% is in things like Clarity, EBR, genetic signatures that have passed their milestone. They're sort of de-risked in many ways. So no real change to what we're doing. It was very disappointing. We had good rationale for why we did it, but that's unfortunately the nature of I guess biotech investing.
And let's be honest, you have a great track record in early stage biotech investing as well. It's made a lot of money for the investors in the fund.
It has, thanks. Yeah.
So my last question, and then in the interest of time, if there are any other, there are a few other questions, and we'll get back to those people directly. But my last question is around alignment. Can you tell us something, not mentioning actual quantums, but something about your personal investment in the strategy, just to reinforce that alignment?
Sure. Yeah, my family and I are the largest investor in the fund, and I feel very, I've shared in the pain, I guess, of the recent share price, unit price weakness, but I feel very excited and confident in the portfolio, and hoping that we can deliver some better numbers for you going forward.
Absolutely. So you shared in the recent pain, but you shared in the upside as well through.
Absolutely, yeah.
Through last year. As I said,
I should thank all the investors for their support over that period, and the recent downturn. It's been really pleasing. We've had no outflows from the funds. In actual fact, we've had about 5% of inflows into the fund. So that's been really appreciated.
It does, and with all the uncertainty, we've seen this sharp pullback in risk appetite that always hits the small growth stocks the hardest, and you're obviously overexposed there. But I think as the fear recedes, there is a lot to be excited about. You've certainly highlighted that today. So to everyone who dialed in, thank you very much for joining us. If you have any other questions, please get in touch. We'd love to hear from you. Any questions that weren't answered on this call, we will get back to you directly. Enjoy the rest of your day.